The couch investing portfolio is up over 1% over the past week, which has outperformed the S&P 500 by just a tiny bit since that was up 0.87%. But since the start of this portfolio, which was earlier in February of this year, the portfolio is up 61.36% compared to the S&P 500, which is up 22.35% in the same period. Now in this video, which is probably going to be one of the most important videos that I make on this channel, and that's not because, oh, here's another 10x, 100x opportunity. No, it's because we're going to talk about a position that I sold out completely. Did not take just profits, I completely closed that position. Why is that important? Well, because I do have a feeling that especially on YouTube, a lot of people get attached to certain stocks. We say don't get married to stocks, right? Don't get emotionally attached to stocks. Me personally, I've learned that in the past, right? With Tesla, for example, the stock didn't do anything for 3 years. That's 3 years of underperformance. That's a lot, right? That's a lot, especially in your investing journey. Now, 3 years ago, when Tesla was at $400 or so, did it make sense? No, it didn't. Even for long-term investors, it's okay sometimes to sell, right? Because 3 years of doing nothing, of course, you can dollar cost average and then things change. But still, that's 3 years where the stock reached 400 and then, paf, went all the way down to close to $100. And then it did stay around $100, $200 for quite a long period of time. Now we're pretty close to all-time highs yet again, another 6.5%, and we're there. Market cap wise, we're already there. It's because shares outstanding have increased, but okay. Anyways, right now, talking about a company that I've sold out completely, one that we've been covering for 4 years, and yes, that's Palantir. I know, not a popular thing to do, right? Because Palantir is an extremely popular stock to own, especially in the retail community, especially on this channel as well, since we've covered it for the last 4 years. But sometimes you just have to face reality and say, doesn't make much sense, right? How many years already are baked in today? Even if you are a long-term investor, what's the point, right? What's the point of buying today Palantir at $170 billion in market cap with the current revenue growth, with the current EPS growth, even with the amazing margins? Does it make sense? Does it make sense holding? That's the question. Because I think we already have the performance of many, many years in the future of Palantir, right? We went from $7 to over $70. Of course, $7 was, let's say, cheap, but still, I mean, I started this portfolio, this one here, we were up 200%. 200% on the position in a matter of months. That's usually results you get in years and years. Of course, timing is everything in investing. But then again, eventually you'll have to sell sometimes, right? When things don't make any sense, you'll have to sell. Not every time. There are some companies that I own that are up also a significant amount. For example, SoFi. SoFi, we are up right now 113.5%. By the way, I did sell 200 shares for a gain of 108.85% gain. But I'm keeping the rest here alive. Why is that? Well, because still, I think revenue here keeps accelerating, especially in 2025 with the lending platform and all of that. And that will justify paying $16 for SoFi right now. With Palantir, I'm not even looking at forward PE because right now looking at a PE ratio for Palantir to me does not make sense. I've said that in the past. It's too early to look at a PE ratio for a company like Palantir. But if you look at EV to sales, 51.4 times, which by the way, if you look at where it was before at the peak back in 2021, that was also around that area, extremely overvalued. And again, I'm repeating this, analyst estimates, right? Because these pricing metrics are based on what analysts here are expecting. I'm clearly expecting this company to grow quicker than the numbers that you're seeing here. But it will have to grow much, much quicker than the numbers that we're seeing here to justify this thing right here. $173.9 billion in market cap. Fiscal year 2024, revenue of not even $3 billion. And let's say it is $3 billion. It's still far, far away from making sense, right? $173.9 billion in market cap, sales, not even $3 billion. So despite me being extremely bullish on Palantir, despite me talking about Palantir a ton on this channel, again, I love the company, love the management, I extremely love their mission. But from an investment standpoint, it just didn't make any sense right now to hold shares at these prices. I'll repeat myself, if it drops down because the stock goes down, or if there is an opportunity in the future to buy more shares because, well, revenue did accelerate 50%, maybe even more for a significant amount of time, so valuation does make sense, I'll happily buy back more shares. Right now, it sits in the cash pile. Now, why is it important for me to make this video? Because Palantir is a very, very popular stock on YouTube. And on YouTube, as you know, the more videos you make, the more views you get, the more money you can make from those videos. Yes, I strongly believe that there are plenty of people on here that make way more money through YouTube than they make through investing in certain stocks. Some folks don't even own the companies that they talk about on a daily basis. The problem here is that they'll sacrifice intelligent investing, safer investing, not providing safe information, normal information, just to get more views, just to get the extra clicks, just to get the extra YouTube dollars. And that's why I've seen plenty of folks, oh, I'm buying more Palantir today. Palantir can 10x from here. Palantir can even 100x from here. Yes, believe it or not, these types of idiots exist. Palantir can 100x from here. That's $17 trillion in market cap. Okay, I think I have a higher chance of living on Mars than that happening in my lifetime or my kids, hypothetical kids' lifetime. But okay, everything becomes very, very 2021-ish, right? Where sudden price targets go up 10x, 20x, nothing makes sense anymore. And like I said, in 2021, I was greedy. I didn't sell Tesla, I didn't sell this, I didn't sell that, because I thought, oh, everything goes up, so it has to continue to go up, right? But valuation did not make sense. Valuations did not make sense. So the logical move and the smart move would have been to sell positions back in 2021. Of course, hindsight 2020. But I do feel that right now we're similar situation than 2021, right? I'm not here specifically talking just about Palantir. I'm talking about the overall market. There are plenty of stocks that are worth billions of dollars, yet they generate 20 million, 50 million, 120 million dollars in sales. How does that make any sense? It does not. It does not. So yes, I sold out of Palantir. I sold a little bit of SoFi as well, took profits of SoFi, took profits of Tesla. But overall, this is still my portfolio right now. Cash is now number one position, 21.24% of the portfolio. And then I have SoFi, PayPal, Tesla, Alphabet, Rocket Lab. Now here you will say, Rocket Lab is up for you 471%. Why aren't you selling? Well, unfortunately for me, I didn't really put that much money into Rocket Lab. Not at all. Only $2,161 in this portfolio. In my main portfolio, thankfully, it's more than that. And there I did take a little bit of profits. But with Rocket Lab, market cap wise, timeline wise, we have Neutron mid-2025, more contracts could be announced, and well, every Neutron launch is an additional $60 million compared to Electron, which is what, $7-8 million. So the difference here is quite big. You get a couple of extra Neutron contracts, and suddenly the sales projections basically, well, go up quite a significant amount. Plus, like I said, smaller market cap. I think the upside here is way more achievable at the current prices. Well, of course, was way better when I bought it at $3 billion. But okay, continuing here, the rest is basically a bit of the same. We've got the local Intel, which right now you might say, oh, why don't you average down? Well, I will maybe average down if I know who the next CEO is going to be, because currently I have no clue who that is going to be. Then I've got Meta up 41.9%. I will probably increase my position in Google quite significantly before the end of the year. Then I've got, of course, my bets for 2025, which are Alibaba and Pinduoduo, ticker symbol PDD, not the rapper. Which of course in traditional Chinese fashion, I'm already down on those 4 and 5%. Small bets I'm taking here for 2025. Let's see if that plays out. With Celsius, we've had actually some positive commentary in the last couple of days with regards to the energy drink category. But with this one, like I said, I'm waiting to see positive momentum in the stock to start buying more shares. And then I've got 2 new positions for short-term trades. Short-term meaning the next 2 weeks. You've got Micron here that I recently bought, not that much. Micron is yet to report earnings. I expect a very good earnings report from them. After that, I'm out. Transmedics, stock is down quite a lot. I'm also down here already 5.5%. Transmedics has an analyst day in the coming week, I believe. And so I think they'll reiterate the 2028 goal, plus they'll announce something new. I think that could be a solid catalyst for the stock. This one, I'm actually on the fence, maybe keeping, maybe not. But right now the plan is just Micron, Transmedics, short-term trades. We will increase the cash position for, well, the increase in Google and Meta to solidify the portfolio a little bit, and then maybe add to some other stocks that have been beaten down. Maybe Uber. I've been talking about Uber for a couple of days and weeks now. I think the opportunity is there, but of course there is risk. I did a video about that. Grab is another one that we've talked about in the last month or so. So yeah, there is space, and then of course just keeping more in cash, waiting for maybe an opportunity, better opportunity to add to other stocks here. I think dips will happen. I don't know when, but when these dips and these maybe crashes will happen, I want to have as much cash as possible to take solid opportunities, something that I did not do back in 2021. I did do in late 2022, beginning of 2023. Thankfully, then I had more cash available. But yeah, the big opportunities I did miss out because I was greedy. I was basically stupid and greedy, right? I thought, oh, huge momentum, everything goes up. Everybody's telling me we can go higher, we can go higher. But reality was that just didn't make much sense. Valuation-wise, didn't make much sense. So yeah, lesson learned. And again, just because I'm doing this doesn't mean you have to do this. Maybe the stock will continue to go up. Who knows? Maybe in a couple of months we're at $100. Can happen, and then I'll say, I missed out on another, 40% or so. Yeah, could very well be. But I don't think I've met someone that's been crying about 200% gains, right? In a matter of months. So yeah, I can live with that. But I don't know. Somehow I think I'll have opportunities to buy Palantir at better prices, let's say. That's just my feeling. I can be completely wrong. But all in all, yeah, I do think that it's an important video to make because usually we talk about stocks to buy, always buy, but it seems like nobody is really willing to tell you when to sell or why they're selling certain stocks. So yeah, I thought this video was important, especially important to me since it is Palantir, since we are talking about this company quite a lot. If it was Tesla, I would say Tesla as well. I've clearly shown you that I've taken profits from Tesla at these prices. But yeah, selling is sometimes necessary. Like they say, don't get married to stocks. And I think that's exactly the case here with Palantir. So yeah, all in all, that's it. It's not the end of the world, right? It's not the end of the world. They probably don't know I sold, right? That's the thing that Peter Lynch said. The stock doesn't know if you own it or you don't, right? Because investing is quite simple, right? You don't need a PhD to invest. But in my opinion, 90% of investing happens in your head and your stomach, maybe even below the stomach, depending on who you are. And so yeah, it's a gut feeling. So that's it. I thought that was a good explanation. If not, ask the questions down below. Like, subscribe, do all of that, and I'll see you all in the next one. Bye-bye.